Tonight we're digging deeper into a story that CNN's investigative team uncovered earlier this year. The report, which first aired on 360, exposed how insurance companies make billions of dollars by deliberately delaying, denying, and disputing legitimate claims. Now, it happens all over the country, and now one state is trying to crack down on hardball insurance companies. Not surprisingly, the insurance industry is fighting back, and it is not pulling any punches. CNN's Drew Griffin tonight is keeping them honest.
Michelle Tribble was actually working for an insurance company when she got rear-ended on the freeway. 10 weeks later, she got hit again. The two accidents combined to injure discs in her back. She started treatment, went to a chiropractor, and submitted her bills to Allstate and Safeco, the company that covered the other driver. It was about $18,000. Were you out to gouge the insurance business?
No, I just wanted the medical bills paid.
Safeco paid Tribble's medical bills, but Allstate fought her, digging up information about her past.
So I had to give them every doctor I'd ever visited that I could remember. They pulled out, a stack of medical records, and they dug through everything to see if, I was at all deceptive.
An arbitrator sided with Tribble, but Allstate went to court. A jury sided with her too, but Allstate appealed again. Finally, after 4 years of fighting, an appeals court judge made Allstate pay.
Well, there's the Zuzu rodeo that hit me.
So this is your case?
That's some of my case, yes.
Valerie Greninger also talks about a drawn-out ordeal with Allstate. After an uninsured motorist hit her, she was treated for neck and shoulder pain. Her bills totaled less than $10,000. But instead of paying, Allstate hired a private eye, she said, to spy on her.
To follow me around, making sure I was actually injured.
Allstate lost again, but not before the company spent several years dragging Greninger through the courts. Allstate wouldn't comment on the two cases except to say that they prove that the current judicial system is working. Washington State Representative Steve Kirby says he hears stories like these all the time, especially when people find out he chairs a State House committee on insurance.
Insurance companies have figured out that they can make more money if they don't pay your claim.
Earlier this year, CNN exposed a controversial insurance industry strategy that we reported began in the mid-1990s. Former insiders say insurance companies began limiting or denying legitimate claims in minor injury cases and reaped billions in profits as a result.
It really came down to three basic elements: a position of delay, a position of denying a claim, and then ultimately, of course, defending that claim that you denied.
The 3 Ds.
Exactly.
Robert Hartwig with the insurance industry-backed Insurance Institute says the strategy was not intended to deny valid claims, but to attack fraud, which he claimed earlier this year was rampant in minor accident cases.
What insurers are trying to do is monitor costs, and every insurer is under the same pressure to do it.
But Steve Kirby and his fellow Washington state lawmakers heard so many complaints from policyholders, they wrote a law to force insurance companies to pay rightful claims. Did the insurance companies follow that law? Hardly. Next, you won't believe what the insurance companies are doing to stop it.
I'll sue for you.
What do you think?
Now lawmakers in Washington state are cracking down with a new law to force insurers to pay rightful claims. The insurance industry, to no one's surprise, is fighting back, and the gloves are off. Once again, here's CNN's Drew Griffin keeping them honest.
Under the new Washington state law, if an insurance company refuses to pay an honest claim and loses in court, it could be forced to pay 3 times the value of the claim plus attorney's fees. It was a simple bill, the Fair Conduct Act, requiring insurance companies to just treat their customers fairly. It got a full hearing here in Olympia. It passed the House, passed the Senate, and was signed by the governor. But before the ink was even dry, the very next day, insurance companies made sure they filed a referendum trying to get it off the books.
In November, the voters will get to decide. Consumers will get to decide what they want to do.
Dana Childers with the Liability Reform Coalition, a group backed by big insurance, gathered enough signatures to get Referendum 67 on the ballot. Its aim, overturn the Fair Conduct Act by having the public vote no before it ever becomes a law.
Well, there was never the case made for why it ought to be law.
But the
I think
state
anytime-
house, the state senate, the governor, there were hearings. The elected officials of this state decided this law was necessary. And
That's
the
right.
insurance company stepped in and said, no, Washington State, you're not going to have this law.
The insurance company stepped in and said, consumers, you got to decide if you want to do this.
And to encourage consumers to vote no on Referendum 67, insurance companies like Allstate, State Farm, Farmers, and others have raised more than $8 million, dwarfing the $886,000 raised by Washington State trial lawyers and others who are trying to get the public to vote yes.
Our lobbyist got a law passed letting us file more lawsuits and threaten triple damages.
Oh, like that California law that forced insurance rates to spike.
So rates spiked. We got our share of the money.
Reject 67 commercials are already on television featuring greedy lawyers in conference rooms plotting to sue insurance companies and warning consumers that frivolous lawsuits will lead to higher insurance rates. And Dana Childers told us Washington State's own insurance commissioner sees no need for the Fair Conduct
But
Act.
his own information that he provided to the legislature and to the public says that this law simply isn't necessary.
But wait a minute. Mike Kreidler is the insurance commissioner, and he told us he supports the law that makes insurers play fair.
Companies act in good faith, it's not going to have a problem. It's not going to cost any more money. It's not going to be any legal actions. There's not going to be no treble damages, because if companies deal with their customers in good faith, there's no penalty.
So what are they so afraid of?
I think the insurance companies like the game where they can have it to their advantage.
Remember Michelle Tribble, the woman who spent 4 years fighting Allstate just to get medical bills paid? She's not surprised at all that insurance companies are pouring money into fighting the Fair Conduct Act.
They poured a lot of money into defeating me.
She just wishes it were on the books when she was hit. Then, as she says, hit again by her insurer. Drew Griffin, CNN, Seattle.
Unbelievable. The amount of money going to insurance companies is simply staggering. Check out the raw data. The Los Angeles Times says in 2005, homeowners and auto insurance companies made a record $44.8 billion in profits. That is the same year as Hurricane Katrina. The Times says that's an increase of nearly 19% from 2004. The insurance companies also had a surplus in 2005 of nearly $427 billion.